Hello, I am Mijuwon from the University of American Cuisine. Today is May 27th and let's start the United States stock news. As usual, I am Mijuwon. I'm here to provide the most recent updates for United States stock investors. I'm recording this broadcast on Monday afternoon, and it's currently 5 post-meridium tomorrow, Tuesday. I also have something scheduled right away. I usually record the broadcast later, but due to my schedule, I'm recording it earlier today, Monday. Actually, these days it feels like I need to take another day off. I used to run a YouTube channel called Honja, but now I'm doing it together with Kim In-jung from Choice Stock. Even just last weekend, I uploaded a video on Friday, and today is the United States stock market news. And then, over the weekend, 3 more videos were uploaded additionally and shared with many people. Among them, one was a collaboration with Choice stockbroker Kim In-jung, and the other 2 videos were also provided by Kim In-jung. He gave us very concise and focused analysis on stocks that we would be interested in if we were to invest in the United States stock market. Actually, videos that analyze blue chip stocks like this tend to get less attention. Please make sure to click and watch them at least once. It's a really good insight, and the stock analysis is very thorough and clear, so the content is excellent. That's why it has received a lot of interest and love from people investing in United States stocks. Now let's get started right away with today's Big 2 news, which was prepared for May 27th. Today is a Tuesday broadcast, but since it's Monday in the United States, the stock market was closed. So I think it would be good to first review the United States stock market situation from last week. Let's take a look at the S&P 500 chart first. I marked the period by week. Overall, you can see that most of the stocks are marked in red. So all 3 major indexes didn't show a good trend. It looks like the entire screen is filled with red stocks. Overall, most of the tech stocks have fallen. Most of what went up were financial stocks that benefit from rising interest rates, and even consumer stocks, which could be considered defensive in this economy, didn't perform well. So overall, the sectors related to the economy didn't do well, and that's how it looks. Among the tech stocks, Google stood out the most with a strong performance. Let's actually take a look at the performance of the 11 sectors in the S&P 500. The part that fell the most is the energy sector. The sectors that performed the worst were technology, negative 4.08%, real estate, negative 3.44%, consumer discretionary, negative 3.25%, and financials, negative 2.99%. That's the part that stands out the most. Last week, all 11 sectors recorded sharp declines, but what's notable is that not a single sector managed to record a plus. Now let's examine the United States' top performance. For Mijun on top during the past week, 7 out of the picks managed to end up in the plus. Since Bitcoin performed the best, B2 was the top performer. Ilju Ildongan plus 8 recorded a plus of 52%. In second place, Celestica had a plus of 5.49%, Credo Technology had a plus of 2.74%, and Bitcoin had a plus of 2.38%, all surpassing the $10,000 mark. Google, Visa, and Broadcom showed impressive increases of 1.37%, 0.98%, and 0.05% respectively. All the other stocks closed lower, but Taiwan Energy closed slightly lower for the week, and Taiwan Semiconductor Manufacturing Company fell 1.15%, while Meta dropped 2.07% for the week. In addition, 2.24%, Nvidia down 3.04%, 3.04%, Trade Desk down 3.17%, Uber down 4.40%, Palantir down 4.79%, Nextera down 5.50%, and AMD dropped 5.85%. Lastly, MicroStrategy recorded the biggest drop, falling 7.58%, making it the worst performer. We couldn't have predicted the United States stock market would drop so drastically in a single week, but that's the current reality. Especially on Friday, the atmosphere was not very good. On Friday, the Dow Jones was down 0.61%, the S and P500 was down 0.67%, and the Nasdaq also fell by about 1%. So, since the atmosphere wasn't good on Friday, let me explain the reasons in detail. Now, if you look at the title of this article, it says that the United States is tightening its grip again. It's a Trump risk, and it's about me, but because of Trump. Also, as the stock prices fell on Friday, the United States stock market continued to decline for 4 consecutive days. If you look at it this way, that's what happened. Just remember the key points. President Tumplium said the European Union will enforce a 50% tariff on Chinese electric vehicles and a 25% tariff on foreign-made smartphones until June 1st. This is a protectionist measure. This applies to all foreign manufacturers like Apple and Samsung. He made this statement to warn against unfair trade practices and protect domestic industries. So they said they would impose a 50% tariff on imported electric vehicles and also a 25% tariff on Apple and Samsung's mobile phones. The S&P 500, Nasdaq, 100 and Dow Jones all fell between 0.6% and 1%. That's how it turned out. Apple, which was hit directly, saw its stock price drop more than 3%, which is not a good sign. But if you look at the trend of the major indices as of Monday, the rankings have changed a bit. Now we'll have to see how things go tomorrow, Tuesday, to know if this atmosphere will continue. First of all, the United States stock market is rising. There was a clear reason for that. It's a trend similar to what we saw in 2018, and that's why the market is reacting this way right now. Let's take a look at what's going on. Donald Trump announced that he has agreed to extend the 50% tariff on European cars and car parts until July 9th. During the meeting, Donald Trump delivered his message through Twitter. Today, European Union Executive President Ursula von der Leyen received a request to extend the deadline for the 50% tariff, which was originally set for June 1st to July 9th. I delivered the message, and this is what I said. And then I agreed to extend it until July 9th, 2025. Doing it that way was my specialty. I could do it as much as I wanted, and that's how I was back then. Is it President Tumpo's gift? Fred's lawyer said that the committee had a good conversation with President Tumpu, but that more time is needed to reach a good agreement, so the deadline has been extended to July 9th. That's the situation. So, what did he say about this part? The European Union and the United States are the most important and close allies in the world. And Europe is moving forward with a new and cooperative attitude, so there is a positive message being sent to X. And so now President Trump can give an answer to this? Yes, but the atmosphere among the audience is definitely better. When the European Union, a union of 27 countries, was formed on Friday, it was said that reaching an agreement would be very difficult. They announced that from June 1st, a 50% tariff would be imposed, and this was confirmed again. Their solidarity is not strong, and they can't find a solution. And before June 1st, there are no plans to reach an agreement with the European Union, so don't expect any negotiations. We will leave this message until Friday. But if we repeat this negative message only until January 1st, it will be clear that the atmosphere has completely changed. I will now read Mr. Min's letter aloud. I explained this in detail at the seminar I held earlier, and I also did so in 2018. President Trump has a history of warning about the situation, then easing up, and then repeating the pattern of strengthening his stance again. So this time as well, he said the tariffs are already set, there will be no negotiations, and he made such strong statements. Therefore, depending on how the negotiations proceed, it seems likely that the tariff issue will be postponed or withdrawn. I was thinking like this, maybe it's because we're similar people. Trump is showing the same strategy this time as it did in the first round. This is how it can be understood. Therefore, in our investment position, there is a high possibility that volatility will continue for quite some time. There is a possibility that the market will move sharply in a binary way, either going up or down, like good, not good, good, not good. Therefore, don't focus solely on being number 1 or 2. Simply put, there is a high possibility that the words of Chairman Trump and the United States stock market's ups and downs will repeat. Therefore, if the main price falls, it is necessary to hold cash to withstand the downturn, and in a bear market, it is clear that reducing the number of stocks you hold and increasing flexibility is a wise personal decision. We are all long-term investors, but just because you're a long-term investor doesn't mean you should just sit and watch after buying stocks. That's what I think. When volatility is extreme like this, I tend to keep more cash on hand. And if stocks fall a lot, I invest more cash to increase the number of shares I own. I believe it's important to adjust the cash ratio in this way, and that's my personal opinion. The next article is about the investment situation of the largest pension fund in the United States. It's a very interesting article. The largest pension fund in the United States invested heavily in Apple stock this time. And I also prepared an opportunity to take a look at 3 other stocks they sold together. The largest pension fund in the United States recently announced that it has made significant changes to its major investment portfolio. Now, the name of this largest pension fund in the United States is the California Public Employees Retirement System. Here, the institution we call CalPERS is the one we're talking about. CalPERS recently sold off Apple stock in the first quarter, and instead, it bought more shares of Meta platforms, AMD and McDonald's, according to reports. CalPERS disclosed these stock transactions through documents submitted to the Securities and Exchange Commission this time, so we can see the details of these trades. The document they submitted is the 13F filing. CalPERS manages assets worth more than $540 billion. Therefore, it is the largest pension fund in the United States in terms of managed assets. You can see it that way. So in that sense, it seems that Apple stock was also bought appropriately. That's because this year, we're seeing a very different market atmosphere compared to last year. In first quarter 2025, it fell 11%, while the S&P 500 only dropped 4%. The gap widened further in second quarter. Apple's stock has fallen 12%, while the S&P 500 has risen 3-4%. Therefore, selling Apple's stock in the first quarter was an extremely wise decision. If you invest wisely, we can overcome this crisis. But that doesn't mean all the problems are completely over. Thanks to the strong brand, Apple is still able to maintain a high price competitiveness. Okay, then let's organize Apple and see which stocks to buy next. Kim Beyonce purchased an additional 579,150 shares of Meta in the first quarter, increasing his total holdings to 550,000 shares. Meta's stock price fell by 16% in the first quarter, but since then, it has surged by a whopping 88% so far. So, the decision to buy more Meta shares was very appropriate. Now moving on to the third stock, AMD. In the first quarter, its stock price fell by 15%. However, we don't know exactly when Compass will rebound in the first quarter, but after the end of March, it has surged by 74%. AMD announced strong first quarter results and raised its annual guidance. After a week, AMD also expanded its share buyback program. Saudi Arabia has signed a contract to build a computing center network for artificial intelligence. They also made such positive announcements. Kimpulse announced they increased their AMD holdings in Q1 by buying 325,180 more shares, totaling 330,000 shares. Kimpulse also bought 49,429 McDonald's shares in Q1, raising their total to 350,000 shares. That's how it is with me. This time, I'll review the 13F file contents directly. Let's take a look at which stocks Kimpulse bought the most in the first quarter and which stocks they sold. I'll show you the list. Now, first let's look at the stocks they bought the most in terms of amount. As expected, VOO is the stock they bought the most in terms of amount. They also bought about $2.5 billion worth. VOO, as you know, is an exchange-traded fund like SPY. It's an exchange-traded fund that tracks the S&P 500. And the second most purchased sector is the medical platform with $3.34 billion invested. Besides that, ABTSYK and McDonald's also had the highest purchase amounts recorded. That's how it looks. Apple stocks were the most purchased, with a recorded $1.14 billion worth of shares bought, significantly more than any other stock. The second most sold stock was Costco. Apple sold 635 million shares. Amazon sold 440 million. Oracle sold 194 million. And Micron sold about 192 million, according to the report. Now then, let's take a look at the list of stocks that currently have the largest weightings and are being invested in the most. If you look at the top of the list, VOO is firmly in first place. In the last quarter, they bought an additional 28.5%, so currently, VOO accounts for 78% of the entire portfolio. That's how it stands right now. Apple's market share decreased by 12.93% in the last quarter, placing them in second position. Even so, Apple still accounts for 5.38% of the entire portfolio, making it the second largest holding. The third is Microsoft, which was bought in a small amount, just 0.5%. Holding 5.02% of the funds, it's the third largest holding. The fourth is NVIDIA. NVIDIA was also slightly reduced by 2%, but it still accounts for 4.43% of the total funds, making it the fourth largest holding. Following that, the fifth is Meta, the sixth is Amazon, the seventh is Berkshire Hathaway, the eighth is Broadcom, the ninth is Alphabet, and the 10th is Alphabet again, with GOOGL and GOOG. The GOOGL above is Google stock with voting rights, while the GOOG below is the stock without voting rights. Just keep in mind that there is this kind of difference. Also, among the stocks we know, 16th, and additionally, it was bought at 6.72%. Tesla ranks 17th, acquired in small quantities at 1.26%. So currently, the stocks held in the portfolio are all less than 1%, and it seems that they are keeping small amounts and watching the situation, which is how it can be summarized. Next, I will deliver the news related to AMD, which was recently selected as the most popular stock in the United States. The main reason is AMD. There is news that this week, institutions bought AMD stock in large quantities. Let's read it together. Is it a high-ranking executive of AMD Advanced Micro Devices? Recently, buying a significant amount of company stock is seen as a sign of confidence in the company's future, strong fundamentals, and stable management, expressing trust in the company's prospects. According to Form 4 documents submitted to the United States Securities and Exchange Commission, by AMD, Phil Guido, the company's Senior Vice President of Operations, purchased an additional 8,800 shares at an average price of $113.56 per share through the market last Tuesday. If that's the case, the total transaction amount would be about $1 million. With this, 42,322 shares of AMD, which based on the latest stock price is worth about $460,000. Hey, just because there are a lot of insiders with me here, doesn't necessarily mean the stock price will go up when they buy. However, investors often interpret this as a positive signal that insiders have confidence in the company's long-term performance. Regarding this part, I have something I want to tell you in advance. Do you see the insider transactions and the current state of buying and selling? There's really no need to be overly concerned about it. It's not good when a lot of people sell at the same time after the price has already dropped significantly. Just because someone is selling doesn't mean that insiders are selling their stocks, so you don't need to look at it negatively. Because when someone sells, there are often multiple complex reasons behind it. For example, there could be a family event, maybe someone is getting married, or they need to pay for their child's college tuition. Besides that, maybe they're buying a new car, or perhaps they're moving to a new house. Also, you might sell your stocks, maybe different stocks, or stocks that you really like. For example, I like AMD, but I might have to sell Tesla stocks. So there are times when you end up selling your stocks like this. Or maybe you need a lot of cash, so you have to sell your stocks to raise money. There are times when you sell stocks you are holding for that reason too. So there are many reasons to sell stocks that are not related to the future of the company. But on the other hand, buying stocks is never for just one reason. The only reason someone named EOM1 would buy AMD stock is because he thinks AMD's future is very promising. When I buy stocks now, I feel like I'm making money. That's the only reason I buy stocks. Insiders buying a stock doesn't guarantee its price will increase. There will be some good days ahead. This kind of optimism is a positive sign. Now, Hampion, it depends on each announcement. AMD as top technology spokesperson is Mark Papermaster. This month, according to the pre-announced Rule 10 B51 trading plan, he exercised and sold 17,500 shares. As I mentioned earlier, it's not unusual for someone to sell shares like this, especially when the amount is significant. However, if you interpret it as meaning that there is a buyer, which is a positive sign, that would be a good thing. So who is the buyer behind all this? Last week, AMD saw a new insider purchase of $6 million worth of shares, and this is seen as a joint action with other institutional buyers. So either the insiders know something or the external environment is just that good right now. This includes the completion of the trade agreement with China, as well as various business contracts such as the recent semiconductor deal with Saudi Arabia and Arabia. Therefore, it can be seen that AMD's current situation is that there is a lot of good news externally as well. For reference, AMD's stock price has risen by as much as 62% from March 2024 to April 2025. However, if you look at the recovery afterwards in just the past month, it has shown an increase of more than 22%. Now, I'll organize it in a table for easier understanding. AMD's insider, before the announcement, was the person we called Phil. Now, who is this person? There is also someone who bought AMD stock earlier this February, and there is a very important part. This purchase was made from 2023 and extended until March 2025, so it's a long-term insider transaction. Buying as an insider over several years is very noteworthy. Now, if you look at the graph here, the red color shows insiders selling stocks, and the green color shows insiders buying stocks. So over the past few years, and even in recent months, AMD's insiders have continued to only sell their stocks. But the trading volume is increasing, and expectations for AMD are rising among insiders. This is the kind of analysis that can be made. Especially noteworthy is that AMD is the second largest enterprise customer for Nvidia, is enterprise graphics. So whether there was good news or not, we are in a good position to know. So if this person is buying stocks, I might need to buy some AMD too. That's the kind of thought you could have. Recently, the good news raising expectations is that Alibaba's own cloud company, Ant Group, is reducing artificial intelligence business expenses, so they're using more AMD and they're becoming more dependent on Chinese GPUs. Well, it's Ant Group. Nvidia's chips are more expensive and underperform compared to their competitors. AMD chips are also good, prompting these announcements. And this means that AMD could become a competitor that puts pressure on Nvidia's market dominance. As many of you may already know, Nvidia's graphics processing unit business is more than 4 times larger than AMD's total sales in 2024. That's an enormous gap. That's why this is significant. Roughly speaking, if AMD increases its market share by just 1% in Nvidia's market, AMD's sales could grow by around 5%, demonstrating the significant potential impact. And if things go well, AMD could secure up to 10% of Nvidia's market. If that happens, AMD's sales could increase by up to 50% according to calculations. AMD is a rapidly growing company, ranked first or second in its industry. Nevertheless, AMD is considered to have investment value because, even with a small market share, it can achieve rapid growth and deliver significant results. Now let's take a look at AMD stock, which is often evaluated as a second-place company. Now, as you can see here on the screen, I already have it displayed. A buy signal for choice stock was generated on May 6th when the price was $100.59. The return to date is 9.7%. If you go inside and check the smart score, it's at 80 points. That's how it is. It is evaluated as a stock that belongs to the top 2% overall. And the important point is in the volume. Up until now, the stock price hasn't gone up much, so it's a stock that's still undervalued. The target price is set at $156, so if that's the case, the current stock price at $110 still has an upside potential of 41.4%. Finally, let's examine the price-earnings ratio and price-earnings to growth ratios. Kim In-jung, our representative, recently provided additional insights on this topic. The price-earnings ratio is 80.3 times and the price-earnings to growth is 0.85 times. Looking at the price-earnings to growth alone, it's very positive. A price-earnings to growth of 0.85 means that, compared to current growth, the valuation is very low, so it's considered undervalued and reasonably priced. But even so, the price-earnings ratio is 80 times. This isn't the forward PE ratio. It's based on last year's earnings, reflecting the market cap increase compared to past earnings. That's why many prefer looking at the forward PE ratio. The company's valuation is calculated based on the past year's earnings, causing people to be curious about the extent of its increase. Let me show you directly. On AMD's Choice Stock Introduction page, if you scroll down, you'll see a section with sales and expected net profit per share. Among these, the most important thing is the earnings per share, which stands for earnings per share. What you see here is this year's earnings forecast, and if you look at the next fiscal year, you can see it here as well, right below. Here, you can check the forecast for the next fiscal year. You can expect AMD to show strong earnings for the next 3 to 5 years. If that happens, the growth rate will be 83.67% compared to last year. And here, to calculate the forward price earnings ratio, if we use the current stock price of 110.31 as the expected value, it works. Let's try it directly. Let's use 110.31. And as you can see here, the expected earnings for the next year are about $3.56 per share. So if you divide by 3.56, that's what you get. If you divide by 3.56, the price-earnings ratio comes out to be less than 30. So, you can directly calculate that AMD's current price-earnings ratio is still quite high compared to the past. Next, let's look at the moving average line. On May 16th, AMD's stock price broke through the moving average line. The 5-day line is at the top, the 20-day line in the middle, and the 60-day line at the bottom in sequential order. Therefore, all the current technical indicators are showing a very positive signal for AMD. Now, the next prepared article is today's highlight. So, on Wednesday, Nvidia's earnings will be announced, and since many investors are paying close attention, let's take a look at Nvidia's previous earnings together. Is this week Wednesday Nvidia? The first quarter results are expected to be announced, and the market is already continuing its rally in anticipation of this event. This is what people are expecting. But the expectations are so high, that's what makes people nervous. The stock price could fall if the results are only first tier, second tier, or third tier. Truly outstanding results are needed for the stock price to rise. That's the current situation. In the first part, we'll look at China's H-20 stealth bomber and its impact. But in the second part, we'll talk about the most difficult period for the company over the past 2 years. This is today's highlight. Now let's see how the results turn out. First, the previous quarter's results will be announced, followed by the guidance for the next quarter. The results are very good. The reason is that, in the end, the H-20 was not actually deployed, so before that, Chinese companies made a big deal about the H-20, which led to speculation that it had already been deployed. The actual results will be strong, which is a reasonable expectation. So, looking back in the second half, these actual results will disappear. Since China's exports are decreasing, the growth rate may drop sharply. This is the part that makes us worry, and it's understandable. This means that although the supply of Hupenes is decreasing and the blockbusters are being released, the actual results did not meet expectations. As a result, investors may have a more negative perception of Nvidia than before. So, there are two main reasons for this. China's economy seemed strong until recently, but there are concerns that its actual demand could vanish entirely in the second half of the year. Due to the lockdown in the previous period, production and sales were disrupted. The rapid growth in the second quarter makes sense in this context. During the last quarter, news related to China dominated the headlines. How Nvidia will overcome the structural challenges it faces is expected to be the main focus of the upcoming announcements. Export controls have been in effect for several years. So, in response, Nvidia released lower performance GPUs like the H800. Have you heard about these? And since that wasn't enough, the next one that came out was the H20. However, if the export restrictions change again in April, 2025 Nvidia could lose about 5 trillion won in sales. Jensen Huang, the chief executive officer, recently said they need to write off inventory. This product is for the Chinese market. But if exporting to China is not possible, there's no way to sell it, so they must get rid of all of it. And the loss in sales is expected to reach $15 billion. So there is a reason for this kind of negative outlook. It was April 2025. What about the Trump administration? The H20 can be used on a supercomputer, and it offers about 20% better performance than the H100, so China has completely banned the export of the H20 to ensure these results. However, it took a long time for the ban to be enforced. So, a lot of H20s have already been sold, which means we can make some predictions about what will happen. Well, I'm here with you now. Many industry experts say that Chinese companies have already purchased the H20 in advance to build large-scale supercomputers. The United States is adopting a new strategic approach. 3 Chinese companies alone have reportedly placed orders for more than 1.3 million Nvidia H20 chips with a total value exceeding $16 billion. This is how they are stockpiling them. And this order volume is more than 6 times the world's largest computing cluster, Colossus. The amount of existing H20 chip inventory in China that can be doubled, revealed just last quarter, is enormous according to current analysis. Regarding when the inventory buildup actually started, analyst Klaus Asweller analyzed that it already began last December. The downgraded H20 system is reportedly selling extremely well. The H20 with performance around 50% of the previous model is currently Nvidia's top-selling product for good reason. An analyst predicted that Nvidia's annual H20 total sales in January alone would reach $12 billion. But when we actually looked at the earnings results, sales to China reached $17.1 billion. But it's unclear how much of these sales to China occurred in the first and second quarters. The sales figures to China for Q1, set to be announced tomorrow, are anticipated to be significantly higher than the period ending in January. In the first quarter, Chinese companies in industries such as Alibaba, ByteDance, and Tencent are lining up to place orders for the H20. They had to buy significantly before export restrictions were implemented. According to the information, Chinese big tech companies ordered H20 chips worth about $16 billion in the first 3 months of this year. This shows how urgent the situation is. Why? Compared to before, it's over 3x higher, hitting a record $5.5 billion. Therefore, we can expect that China's purchases in the first quarter grew at an explosive and rapid pace. Nvidia experienced a record $5.5 billion inventory loss in Q1. But if we consider that this export restriction only took effect in the last 3 weeks of the first quarter, it means that the monthly sales rate is actually much higher. Now, with an inventory of $5.5 billion, we can estimate just how much they actually sold. Is there any more information about that? In Q1 of this year, China's exports reached an impressive $17.1 billion, a substantial share of the yearly total. China's sales hit $17.1 billion last year. According to the latest information, it is expected that in just the first 3 months, the sales will reach a similar level, and such forecasts are being made. And before the government intervened, Nvidia was handling a huge number of orders from China very quickly. Therefore, their earnings for the first quarter are expected to be strong. As sales to China increase significantly, there is a high possibility of strong sales and positive earnings results. Then our focus should be on guidance. Nvidia's actual announcement is expected to be in line with or slightly above expectations for the past few quarters. Although they did not mention how much performance will be improved in the second quarter, AMD, Nvidia's main competitor, announced that the performance of the MI308, which is scheduled to be released in the second quarter, will increase significantly. AMD has just announced its earnings. But the reason the stock price didn't go up is probably because in the second quarter, the MI308 is not expected to sell as much as people thought. The reason is supply constraints, as they announced the amount of supply they would receive. That's why AMD is also unlikely to disclose specific details in their actual announcement. This is why there are so many speculations and predictions coming out right now. Quarter-on-quarter refers to growth compared to the previous quarter, which is expected to be relatively low based on the current forecast. The supply of Blackwell has increased compared to before, but the expansion scale is not as large as expected. Thus, the supply is not being fully released yet. That's the current situation. Because of the transition between Blackwell GPUs and the old Hopper architecture, investors are currently paying close attention to whether the H20's influence will lead to a decrease in demand for the older Hopper architecture. That's what the market is focusing on right now. Let me summarize it again. Up until the first quarter, things were solid. So, why is the H20 selling so incredibly well? We need to keep an eye on guidance, but what's the core of the guidance? The H20's positive impact will fade away soon, and that's because the subsidies will end starting in April. So, when the positive impact of the H20 disappears like this, the key is to see the earnings results and the guidance announcement. Many blank sales could be problematic. If unsure, it's best to wait and observe. Nvidia recorded graphics processing unit sales of 11 trillion won in the fourth quarter, making it the fastest product launch in history. This is the background. But from January to March, the actual production volume of the GB200 MVL72 lineup was virtually non-existent. That means there wasn't much production, and it was only in April that the shipping schedule started to increase rapidly. Starting in April, they finally began producing a lot more, so you can see it like this. According to Morgan Stanley's data, from January to March, the output of the GB200 MVL72 rack was less than about 1,000 units. And then starting in April, as they ramp up production, it's expected that the number will sharply increase to about 1,500 units. If that happens, in the second half of the year, the estimated shipment of GB20 miles VL72 racks could rise from 4,000 to around 5,000 units. That's a 3-4 times increase compared to the previous period, which is why the current outlook is improving. If you can make about 1,500 units in a month over 3 months, you can make around 4,500 units. So in the second quarter, they made and sold about 4,500 servers, which is a record compared to before. Based on this adjusted estimate, it's expected that they sold about 4,500 units specifically. 554.3 pounds, B200 miles, VL72S. The expected sales are based on the average selling price, or average selling price. If we set the average selling price at $300,000, the sales would be about $1.35 billion. Now, if we combine HGX B200 and other related products here, the next part is that this guidance will be presented. This way, we can make our projections. Now, China's influence could be even bigger in the second quarter, but it also means that Blackwell sales could offset some of those losses. If they sold at least 4,500 units, the guidance for the next quarter could be strong. That's the current outlook. But it's still uncertain. The suppliers are not fully agreeing with that conclusion. The chart shows emerging industries are on the rise. For example, there are companies that listen to requests, build servers and sell them. For instance, Supermicro and HP are coming up. Traditionally, guidance hasn't been good. That's why companies that build and sell servers haven't had good guidance either. For that reason, even Nvidia's guidance may not be good. That's the current situation. On the other hand, strictly speaking, companies like Ventibra or VentiB are not companies that build servers and sell them after making their own racks. This is a company that provides essential power supply and thermal management solutions for data centers and infrastructure. VentiB's guidance was very good. But there's a problem. In cases like VentiB, it's more forward-looking than conservative. Why is that? Sales in Q3 exceed those in Q2, so Nvidia's sales will likely be better in the next period than in the current period. Given the volatility in Vertiv's ordinary sales outlook, it's crucial to consider these factors. And in the case of Dahongqi and Foxconn, they showed guidance for strong sales growth. So when you look at several results in advance, there are also unexpected parts that come up, so it's not always perfect. Looking at the expectations, if you look at it this way, this is what it seems like. Now let me summarize it in Hanmadilo. Artificial intelligence's fame is still lacking at the beginning. I think I've said this about 100 times. At the current point, the first topic of Mijun's talk is still Nvidia. But what is the reason for this week's correction, and what are the results? There are ways to meet those expectations, and there are also possibilities that those expectations may not be met. The company's outlook for the next period should meet market expectations. If it doesn't, that's an unfavorable situation. So what should we do? So depending on the proportion of Nvidia shares in your portfolio, you may need to adjust your investment strategy. If, for example, Nvidia makes up less than 5% of your entire portfolio, then you can consider adding more. In my case, it's over 20% right now. More than 20% of my total assets are invested in Nvidia. So having a single stock take up 15% or more of your portfolio like this is quite risky. I can't help but feel nervous as I always have these concerns in mind. Currently, my portfolio's cash portion is high at 10%. Initially, I plan to maintain about 20% of my assets in cash. Many people believe Nvidia's stock is undervalued and its price is surging, prompting some to buy. However, I'm considering increasing my cash holdings instead. Recently, on Tuesday, there were a lot of people buying Nvidia stocks in the market, so the stock price surged. If that happens, my plan could change at any time. I will make adjustments accordingly. Today's content, which is being prepared for the last time, is about the United States stock market situation today. You will be able to watch the video together today. Bitcoin has exceeded $110,000, reaching new highs amid a very positive atmosphere surrounding the cryptocurrency. Now, if we listen to the previous trends of Bitcoin together, it will be great. Today's broadcast ends here. Thank you to everyone who stayed with us until the end, and we sincerely appreciate your support. Let's continue our fight together as United States stock investors until we all retire. Have a great day. Thanks.
Now it's time for today's pre-market session. This is Ho Juan Larry from Bitcoin. I'm here with a new record for Bitcoin. But can this momentum continue? Now joining me is Bitwise's Chief Information Officer, Imant Ho-Gyeon. Matt, it's great to see you again. Can you explain what's behind this recent surge in Bitcoin? Currently, the rally is being driven by spot exchange traded fund inflows.
Yes, that's right. That's how it happened. Both sides are using Bitcoin in the best way possible, and I think this trend will continue. One is that institutions are entering the cryptocurrency market. In the past 30 days, there have been exchange-traded fund inflows of over $8 billion into Bitcoin. This is a new demand for a fixed supply, which drives up the price. Simultaneously, Washington is helping generate significant support from non-traditional investors. Today, the market is reacting to the fact that the government is lowering interest rates, injecting more money, and expanding fiscal spending rather than agreeing with these actions. This is driving people to seek alternatives beyond the legal and regulatory framework, with Bitcoin being that alternative. I think this is the beginning of a big trend. We will see the highest price ever, and we will also see another dramatic decline in Bitcoin.
Hello, this is Matt Julie. This was one of the most notable moments in Bitcoin's recent history. You just said it in your last words. But the experts we are talking to don't think the concerns about the dollar losing its status or about fiscal discipline disappearing in the current United States market will continue. But those concerns were short-lived. If that's the case, where does the concern that this time the fiscal discipline will continue to be eroded due to things like Bitcoin come from? Maybe that's one of the reasons for this upward trend?
Yes, I personally think that the optimistic sentiment among investors has started to rise again. The 30-year yield has exceeded 5%. What's happening with Japanese government bonds? People have abandoned the idea that the United States government will be fiscally responsible, and I think investors are starting to doubt that deficits will continue indefinitely. This means that over time, the value of the dollar is being questioned. People want security. I think this is adding significant pressure to savings. As institutional investors enter, structural imbalances between supply and demand arise, which is a key reason for the price increase. Today's market was driven by fundamental factors.
Why does the logic that applies to Bitcoin not apply to other altcoins?
I think there is a fundamental difference between assets like Bitcoin, Ethereum, and Solana. Bitcoin is a digital gold for the world. That blockchain was created for that purpose, and it is stored and maintained as money. More than 10 governments, the largest companies, and the largest hedge funds are holding it. Other assets are very speculative investments. We are very conservative about Ethereum and also very conservative about Solana. But these are called altcoins, and they are more technological investments. So I don't expect these to perform exceptionally well. I think the relative gap will widen over time. We are neutral on both. Investors should own both, in my opinion. However, one is digital gold, while the other is like a new version of NASDAQ.
As you know, Tim Draper recently predicted that Bitcoin would open another bull market. Last time, he directly took out his own coin from his wallet, and there were many other crypto people gathered there as well. What do you expect this time? So, do you think the president is trying to show more trust in crypto by talking about his own token or coin, or is he just trying to attract more people to Bitcoin?
To put it simply, this is just about controlling the currency. Over the past 4 months, the main issues have come from Washington, District of Columbia. The attitude toward cryptocurrency has been very negative. The Securities and Exchange Commission has reversed its stance on cryptocurrency, shifting from anti-cryptocurrency to pro-cryptocurrency. In Congress, the Stablecoin Act is moving forward. We have seen executive orders that are very positive for Bitcoin. I used to think that the Trump-Bitcoin relationship was negative for cryptocurrency, but there is a lot of good news in the market right now. Actually, the reason for today's surge is that there has been a lot of positive news coming out of Washington this year. But while those news stories have already been factored into the market and prices, right now those positive news stories are still having an impact. So regarding the Trump tariff issue, it had a negative impact before the crypto rally. So while investors have a positive view of Bitcoin, that doesn't mean their confidence is solid. The recent major issue is the anticipated shift in the Securities and Exchange Commission's position on approving the Washington District of Columbia Exchange Traded Fund, which could lead to long-term institutional fund inflow into crypto. So the reason we're seeing new all-time highs is because, in my opinion, the outlook is getting even better.
Thank you.